Good morning, students. Welcome you all once again in the live virtual classes of ICAI. So, students, today we are going to talk about one of the smallest, important, and interesting standard, inventories. It's an again asset-based standard. So, friends, you know what is the unique things about inventory? Anyone? Can you guess what is the unique things about inventory? So, let me share that. If I talk about inventory, right? I hope my Excel file is visible. Is it visible to
Yes,
everyone?
yes,
Yes, sir.
visible.
Fine, sir.
Yeah, great. So if I talk about inventory, in accounting standard, we read AS2. AS2 is on inventory, right? AS2 talks about inventories. Then globally, there is IAS2. It also talks about inventories. And in line with IAS, in line with IFRS, we have Ind AS2, which talks about inventories. So this is the unique standard where in accounting standard, in IFRS, in Ind AS, the number is 2. The number is 2, right? So be it accounting standard, be it IFRS, be it Ind AS, it is number 2 for inventories. AS2, IAS2 and Ind AS2. That is one unique thing. Second, if you remember accounting standard 2, then IAS2, Ind AS2 is one and the same thing. No big difference between AS2 and Ind AS2, right? So if you prepared this standard in CA Inter, then it will be a cakewalk for you in CA Final, right? So friends, this inventory standard, when we talk about inventory standard, so this inventory standard takes care of 3 aspects. Can you tell me what 3 aspects this standard covers? Anyone? I'm just setting the context.
Measurement, recognition, and presentation.
No, so those were the 4 pillars of accounting standard, right? Be it asset-based standard, it covers 4 aspects from the pillar perspective. So it covers recognition, measurement, presentation, disclosure. But 3 kind of inventories are covered in this standard, which is raw material,
Okay, sir.
work in
Raw
progress,
material, work in progress, finished goods,
and
and
finished
packaging
goods.
material, which is mainly used for the um, packaging,
Yeah,
not the secondary material.
yeah, you're right. So let's go back to the PowerPoint presentation and then we'll discuss more about this standard. We'll enter into this standard, discuss more about this standard. What is the objective of this standard? So the objective is to prescribe accounting treatment of inventories. And when we say accounting treatment, it means what are the 4 pillars of accounting?
RMPD.
RMPD.
RMPD. Very good. Very good. All are speaking, all are singing the same song. RMPD, recognition, measurement, presentation,
Presentation
disclosure.
and disclosure.
Yes, yes. So this standard talks about how to recognize, when to recognize inventory, how to measure, when to measure, right? Measurement, where to present, right? And what to disclose. This standard talks about these 4 aspects relating to inventories, right? Then talking about the scope, this standard is applicable to all inventories except work in progress arising under construction contract, including directly related services, which is covered under Ind AS 115. Construction contract related. You remember in Ind AS 115 we covered contract cost. If you are able to remember with the blur
Yes.
images.
Yes, remember.
सुना सुना लग रहा है, सुना सुना लग रहा है विभू,
सुना सुना लग रहा है सर.
सुना लग रहा है ना. So contract cost which is covered under Ind AS 115 is not part of Ind AS 2. Financial instruments, right? Financial instruments are covered under Ind AS 32 and Ind AS 109 if it is a financial instrument, like mutual fund, investments, right? Stocks. Stocks means shares. So these are covered under Ind AS 32 and Ind AS 109. Biological asset related to agricultural activity and agriculture produce at the point of harvest. When we read Ind AS 41, we'll cover this aspect. Biological asset. What is my biological asset? It is living plant and animal. Living plant and animal. Okay. So the biological asset, if it is related to agricultural activity and agriculture produce at the point of harvest, means if some fruits are lying on the tree, right, and you are plucking those fruits from the trees. So these fruits is also not covered under Ind AS 2. It is covered under Ind AS 41. Then measurement of inventories held by producer of agriculture produce after harvest and commodity broker traders measuring inventories at fair value less cost to sell. So if I have a mango orchard, right? Mango orchard. What and why? Why I have a mango orchard? Because I want to produce mangoes, right? So I have 100 mango trees on which mangoes are growing. These mangoes, right? So these are the agriculture produce, okay? So when I'm harvesting these mangoes, right? So the measurement is also measurement of these mangoes, while my business is to sell mangoes, right? But I'm harvesting these mangoes from trees. So the measurement of these mangoes at the time of initial recognition will come through Ind AS 41, not Ind AS 2. Okay. So on the third point, in the third point, we were talking about the item. In fourth point, we were talking about the measurement. Okay. So the measurement of inventories held by the producer of agriculture produce after harvest and commodity broker trader measuring inventories at fair value less cost to sell. So these measurements are not done by Ind AS 2, it is done by some other standard, which is 41 or 109. This is just for your memory, just to remember. Okay. Right. So this is the objective and scope of the inventory. Now coming to the definition of inventory. Tell me, we have covered Ind AS 105 also. What was the title of Ind AS 105?
Non-current assets held for sale.
Non-current asset held for sale and discontinued operations. Non-current asset held for sale. Right. So what is the difference between that Ind AS 105 and Ind AS 2 inventory?
So these are current assets, inventories,
Very good,
and those are
Sanjay.
non-current assets.
Yes. So that standard was covering the non-current assets which are held for sale. Right. Means that 105 was covering non-current asset, but inventory by its nature is a current asset, right? As per Ind AS 1, because it is held for trading, held for selling. So in the ordinary course of business. So inventories are current asset. Number two, you remember the non-current asset like PPE, intangible asset, investment property. These will become held for sale when two conditions will met, ISPC and HP. You remember Internet Service Provider Company and Hindustan Petroleum?
Yes, sir.
Yeah.
Yes.
Sorry, immediate sale and present condition and
Yeah.
highly
When that
probable.
asset is available for
And sale is high
immediate
probable.
sale. Yes. When the asset is available for immediate sale in present condition and sale is highly probable. Like, so in 105, those two conditions need to be satisfied to become a non-current asset as a non-current asset held for sale. But inventory by its nature, as also clarified by Sanjay, that inventory is a current asset, number one. Number two, inventories are assets which are held for sale in the ordinary course of the business. You are not required to push something. No. You are not required to check the condition of ISPC, HP. No, it is held for sale in the ordinary course of business. If it is inventory understood, it is held for sale, right? You are not required to see any condition for that, right? Because inventory by its name, it is It is held for sale in the ordinary course of business, right? The business is to earn money by way of selling inventory. Okay, like the students who are attending this class. So it is a rebuttable presumption that yes, you guys are what? You guys are here for learning. You are attending. Okay, correct. And I am here for teaching. So rebuttable presumption, like inventories, no condition you need to see. Inventories are held for sale in the ordinary course of business. Okay. Sir, what about manufacturing setup? If it is a trading, like you guys are going to the grocery shop for buying bread, milk, right? Biscuits. So groceries. So for them, inventories are held for sale in the ordinary course of business. It is more like trading. They are purchasing grocery and they are selling grocery. What about manufacturing setup? So inventories are asset which are held for sale in the ordinary course of business. Means it is talking about finished goods, right? It is talking about finished goods. Like the mobile shop or mobile showroom. So they are buying mobile phones and they are selling mobile phones. But what about Samsung? What about Apple? Samsung and Apple is also selling these mobile phones, but they are manufacturing also, right? So they are the manufacturer and they are the seller. So what you require for manufacturing?
The raw material.
Raw material, right? And this raw material has to pass through some processes to getting converted into the output, into the finished goods, right?
Yes,
Work
sir.
in progress.
Work in progress. So inventories are assets which are held for sale in the ordinary course of business, means finished goods, or in the process of production for such sale. In the process of production for such sale means work in progress, or in the form of material or supplies to be consumed in the production process or in the rendering of service, right? It is talking about the raw material in the form of material or supplies to be consumed in the production process or in the rendering of service, right? If it is a trading organization, probably finished goods is the only inventory. But if it is a manufacturing setup, then raw material, work in progress, then finished goods. This is a journey, right? Raw material, then finished goods, then raw material, then WIP,
WIP.
then finished goods. Okay. Then finished goods. This is the journey of an inventory, right? So this standard covers all three: raw material, work in progress, finished goods. Okay. Yes, perfect. Now let's move on. Friends, this standard you have already covered in CA Inter. So when you start the standard like that, your 50% job is over, right? So if you pretend that something you have already covered, believe me, the speed of learning and the speed of understanding and the comfort level will grow like anything. These are the tips. These are the small tips for preparation, for having a hold on any topic, right? And good to see all of you once again, right? After almost 15 days, not 15 days, after almost 10 days, right?
Yes, sir. We are eagerly waiting for your class.
Oh, thank you. Yes. So inventory, what are the key points? Let's discuss some key points. Inventory may include intangible assets that are being produced for resale, for example, software. Have you heard about TCS, Infosys, SAP, SAP, Oracle, Microsoft?
Yes.
All these companies, what these companies are selling?
Software.
These companies are selling software. Of course, these companies might be selling hardware also. These companies are selling software, ERP systems, right? So what is the nature of these softwares, ERP systems for these companies? Is it intangible asset covered under Ind AS 38?
No.
No, it is an inventory. It is an inventory for them, right? So inventory not necessarily means only a physical or tangible item. No, right? Inventory का मतलब सिर्फ tangible या physical item नहीं है. Inventory could be intangible asset also, right? For those companies, those entities whose main business is to sell inventory, whose main business is to sell those softwares. Okay. So inventory may include intangible asset also. Inventory also include properties that have been purchased or are being developed for resale in the ordinary course of business. Have you heard about DLF?
Yes.
Yes. Supertech?
Yes.
Supertech is no more, but Supertech becomes insolvent. So Godrej Properties?
Yes.
Godrej? So these
Yes.
companies are constructing flats, or these companies are buying land, buying flats, selling flats. So what is the nature of these flats? Is it PP for these companies?
No, inventories.
For these companies, these properties. So as the name suggests, properties, not necessarily it will always be your PP or investment property, right? If these properties are held for sale in the ordinary course of business, then it will become your inventory, right? For Godrej, DLF, Supertech, for these companies, these properties are held for sale in the ordinary course of business. But what happened if selling the property is not the ordinary course of business, and the company is selling one of its business, one of its office, one of its property due to the cash crunch? Then
Held for sale.
then it will be covered under Ind AS 105, non-current asset held for sale. Non-current asset held for sale. Right, Neha? Non-current asset held for sale, you remember?
Yes, sir. Yes, sir.
See, I'm discussing Ind AS 2, but I'm also touching other standards also. 38, 16, 40, right? 105. So that you will be able to relate these aspects also. Because when you are reading a separate standard. But in your exam, it will be like a khichdi. You understand what is meant by khichdi?
Yes.
A mix of
Yes, sir.
rice, pulse, everything, right? So you need to understand how to relate. You are a CA student, you are a CA final students, and you know what is the difference between a CA final student and a CA and a chartered accountant? The date of result. That's all. That's all. If a student will pass on the date of result, he will become a chartered accountant. If he will not be able to crack, he still remain a CA student. But the knowledge, a student who got passed, he become a chartered accountant, same knowledge, but who not able to crack, same knowledge, right? So the only difference is the date of result. So that is why, my dear friends, when you are learning, when you are reading, try to relate also. Because when you land into the corporate world, you are not confined to only one standard. You have to give your views. Okay, this may be covered under this standard, this may be covered under that. The probable and the possible kind of accounting treatment are this. These are the different alternatives. Okay, right? So in your learning, in your student life also, try to relate. This will make your life easy. Not only in the corporate world, but in the examination table also. Okay. So friends, we talked about this intangible assets. We talked about these properties. These may also be covered under inventories if it is held for sale in the ordinary course of business. Spare parts, standby and servicing equipment, for example, tools and consumable lubricants, are classified as inventory. Friends, spare parts, standby and servicing equipment. Have we learned this concept in any standard? In any asset related standard, Neha?
Yes.
Sir, tangible asset.
Tangible asset means PP, right?
Yes.
Ind AS 16. You are absolutely right, Neha. In Ind AS 16, we have covered this concept of spare parts, standby and servicing equipment, where we have told that spare parts, standby and servicing equipment will be classified as property, plant and equipment if it meets the definition and criteria of PP&E, right? Means it is a tangible item which is held for use in the production or supply of goods and services, held for rental purposes, administrative purposes, and the life is more than 1 year, more than one period. Remember? And we discussed if it is not meeting the definition of PPE, then it will be covered under what? Covered under Ind AS 2, right? We discussed this part. It will be covered under Ind AS 2. So likewise, the spare parts, standby and servicing equipment are classified as inventory unless they are expected to be used during more than one period, or can be used only in connection with item of PP&E, in which case they are classified as PP&E. Right? See, what we have discussed in Ind AS 16, the same thing which is written in Ind AS 2 also. Okay? Because these two standards are interconnected for this aspect. Then, reusable and returnable packaging or parts that are sold to a customer but will be returned to the seller to be reused are not inventory if the item will be used during more than one period. Reusable and returnable packaging or parts. Have you seen, so nowadays, if you guys are living in metro cities, right, you know what happens? In metro cities, there is a company called Country Milk. Okay, have you heard about Country Milk?
Yes.
So what they are doing, they are, they are getting the milk from the remote areas, from the villages, and they are packaging into the bottles and they're delivering the bottles to the houses. Okay. For example, if I have taken a subscription for a month, you can take a subscription and they are giving some discount, etc., etc. So let's say I have taken a subscription for the month. What they will do, on the first day, they will deliver milk into the bottle, right, on my doorstep at 5 or 5:30 types. So I'll get these bottles full of milk, right? And in the evening, I have to keep those bottles outside my gate, outside my door. So the point is, these bottles are not gifted to me. These bottles are returnable bottles, reusable bottles, right? So this is not for my consumption. Okay. Since I have taken a subscription, when I'll cancel the subscription, they will take the bottle from me. They will take the bottle permanently from me. So the point is, these returnable and reusable packaging material like bottles, are they classified as an inventory? Answer is not, right? So if these are expected to be used for more than one period, it is not classified as an inventory, right? So there are two kinds of material: primary packaging material, secondary packaging material. Have you bring the milk like Amul, Mother Dairy, Parag in those packets?
Yes. No.
Have you purchased the milk
Yes.
packet?
Yes, sir.
मिल्क पैकेट आपने खरीदा होगा ना, हो सकता है अभी अभी आपके घर में आया हो नेहा, राइट? मिल्क पैकेट, अमूल, पराग, मदर डेयरी.
Yes, sir.
So these milk packets, so once you use the milk, right, Neha, are you returning these packets, plastic packets, to the shopkeeper? Answer is no.
No, sir.
You are throwing in the dustbin, right? You're not returning it. The companies are not getting this, right? So this is known as a primary packaging material. Primary packaging material, right? So primary packaging material is not for the purpose of returning or reusing, okay? And it is this primary packaging material will be classified as an inventory, right? Primary packaging material will be classified as an inventory, okay? But this secondary packaging material, for example, if you had a cold drink in the glass bottle, So when you're drinking the cold drink, it is 10 rupee or 15 rupee, but you're returning that glass bottle, right? But if you have taken a fruity maza in those plastic sachet or on those container, right? You are just drinking and throwing those containers, right? आपने लिया होगा ना फ्रूटी
Yes,
माजा,
sir.
वो 10 रुपीज का सैसे आता है ना, 10 रुपीज का,
हाँ सर,
Yes, sir.
वो आप उसको क्या रिटर्न करते हो? नहीं करते ना.
वही सर.
So it's a primary packaging material. So if it is a primary packaging material which is directly attributable, which is important to store, which is important to make this inventory sellable, then it will be classified as an inventory. Otherwise, you need to see whether it is an inventory or it is a PPNE or some other standard, right? Yes. So as per Ind AS 2, inventories includes material and supplies awaiting use in the production process. Whether packing material and publicity material are covered by the term materials and supplies awaiting use in the production process. So
No,
what is the
sir.
answer? While
No,
the
sir.
primary packing material may be included within the scope of the term material, right? And supplies awaiting use in the production process, but the secondary packing material and publicity material cannot be included, as these are the selling cost, okay, which are required to be excluded as per Ind AS 2. For this purpose, the primary packing material is one which is essential to bring an item of inventory to its sellable condition. For example, bottle, can, etc. in case of food and beverages industry. So if that milk will not be stored in the plastic packets, how will you get the milk, right? How it will become sellable? कैसे sellable होगा? Okay, so this primary packing material is considered as an inventory. Other packing material required for transporting and forwarding the material will normally be in the nature of secondary packing material. You know, the Pepsi, Thumbs Up, Coca-Cola. So if a shopkeeper is selling their material, have you seen the red color fridge, red refrigerator in the shop?
Yes, sir.
Sir.
ये सब आपकी डे टू डे की बातें हैं जो मैं कर रहा हूं आपसे. I'm just talking you day-to-day things, right? Just imagine, visualize, or after this class, go to a shopkeeper just to have a cold drink. You will find a red color refrigerator, and on that red color refrigerator, probably Coca-Cola or Thumbs Up may be written. Okay, so these refrigerators are given by the manufacturer, by the company. Okay, and these refrigerators are used to make the cold drink cold, right? To refrigerate the cold drink, right? So the point is whether that refrigerator is a inventory. Refrigerator is not an inventory, right? Refrigerator is a PPNE. Okay, it's a PPNE. The carrot, have you seen the carrot on which the 12 bottles are kept? So these carrots are also not for the end use. These carrots are also like a returnable material, secondary packaging material. These carrots are also not the inventory. It is a PPNE kind of thing. Okay. Now coming to the measurement, friends. As I told you, the recognition. What is recognition? Raw material, WIP, finished goods. All these are recognized as an inventory, except 4-5 items. You remember we have covered, right? And if it is in the ordinary course of business, as I told you, it is a rebuttable presumption. If it is in ordinary course of the business, it is an inventory. Ordinary course of business में क्या होना चाहिए? Sale होना चाहिए, held for sale. If it is held for sale, if it is available for sale in the ordinary course of business, it is an inventory, right? Okay. Inventories shall be measured at the lower of cost and NRV. Lower of cost and NRV. AS2 में measurement क्या होती थी? What was the measurement in accounting standard 2? Cost or NRV? What is the measurement in
Same.
accounting standard 2?
Cost and lower of cost and net realizable value.
Same. Lower of cost and NRV. Lower of cost and net realizable value, right? So inventory is also required to be measured at the lower of cost and NRV. Lower of cost and NRV. For example, when you produced a mobile phone, Samsung when Samsung has produced a mobile phone, it has costed 50,000 rupees to Samsung. Right? But iPhone launched iPhone 17 and people are moving towards iPhone 17 because iPhone 17, Apple is giving a huge discount. They have done a huge marketing, brand promotion, etc., etc. So people are rushing towards Apple and people are not, and the sale is declined for Samsung. And the cost is 50,000 rupees, but Samsung expects whatever lot they have already produced, Samsung expects they will be able to sell this mobile phone at 40,000 rupees only in the market. Right? They will able to sell these mobile phones at 40,000 in the market. If they will scrap it, the entire 50,000 will be lost. Okay. But if they will sell it, they will get 40,000 rupees. So NRV is 40,000 rupees. Cost of the mobile phone is 50,000 rupees. Tell me, what should be the value of the inventory on which it will come into the balance sheet in the books of accounts?
40,000.
40,000. Lower of cost and NRV. Lower of cost and NRV, right? Yes. Cost includes cost of purchase, cost of conversion, and other costs incurred in bringing the inventories to their present location and condition. Let me share a quick story with all of you. So 10 years back, let me tell you, I'm talking about 2014, right? When this Ind AS were getting, Ind AS were in the verge of getting notified. It was October 2014. I'm talking about almost 11 years back. So ICAI invited me to speak on Ind AS 2, right? At that point of time, I don't have a PowerPoint presentation on Ind AS 2 because Ind AS were not notified in India. It was on the verge of getting notified. So I was having accounting standard 2 PPT and I read AS2 in my CA days, right? And I worked on AS2. So they told that, can you take a lecture on Ind AS2 tomorrow? It was with the chartered accountants. I told ICAI, how can I take the lecture on Ind AS2? I don't have the presentation as well as I haven't read Ind AS2 so far. So, they just told me one line and I become ready to take the lecture. They told me that AS2, there is no difference between Ind AS2 and AS2 technically. While there are small differences, but technically there is no difference. So they told me if you know AS2, it is Ind AS2. You just need to remember that you have to speak Ind AS. Ind. You just need to prefix Ind. I said, okay, I'll take the lecture. Okay. Because I know AS2. Okay. Because I read AS2 in my CA days. I worked on AS2. So the point is, this Ind AS2 is just like AS2. Okay. It is just like accounting standard 2. So friends, cost or NRV, whichever is lower. And what is cost? You remember these 3 pillars in PPE standard also? Ind AS 16?
Yes, sir.
That PPE standard? Like this.
Yes.
In Ind AS 2 also, cost includes cost of purchase, cost of conversion, and other costs incurred in bringing the inventories to their present location and condition. Right? Present location and condition. Okay? Present location and condition. Cost includes cost of purchase, cost of conversion, and other costs incurred in bringing the inventories to their present location and condition. Now, what is my cost of purchase? Purchase cost includes the purchase price, including transport and handling cost, non-recoverable taxes, non-refundable taxes. Have you heard this word non-refundable taxes in any standard while
Yes,
measuring the
sir.
cost?
Yes.
In 16 also we had it.
PP&E and intangible asset, right?
Yes.
Ind AS 16 and Ind AS 30 Ind AS 16 and Ind AS 38 it was there, right? So purchase cost including the purchase price, transport and handling cost, non-refundable taxes and other costs directly attributable to the purchase. Have you heard about this directly attributable cost in any standard?
Yes, sir. In PPE as well as the intangible asset.
Yes.
8.
So my dear friends, you guys need to prepare like this only, right? So when you are reading one standard, you should be able to relate that standard and the concepts with the other standard and the concepts. Believe me, your preparation will become 2x or 3x faster. Believe me. Right? एक बार आदत पड़ जाएगी तो आपकी प्रिपरेशन भी वैसी होगी. ओके?
हाँ सर, वरना बीच में खिचड़ी हो जाता है.
बीच में
खिचड़ी हो जाता है.
कब? अगर ऐसा करने से?
नहीं सर, अगर ऐसा क्लैरिटी से नहीं रहेगा.
हाँ, यस. सो इसमें जस्ट आपको क्लैरिटी, इससे क्लैरिटी आपकी बढ़ेगी, राइट? इट विल इंक्रीज योर क्लैरिटी, इट विल बूस्ट योर क्लैरिटी. दैट्स ऑल. दैट्स ओके. Non-refundable taxes, it will become part of your cost of asset, be it PP, be it intangible asset, be it inventory. Okay. So this will give you more clarity. So cost of purchase, whatever is the purchase price, transport and handling cost, non-refundable taxes and other costs directly attributable to the purchase. Directly attributable costs we need to capitalize as a part of the cost of the inventory. Right. Deferred payment terms. Have you heard about the word deferred payment terms in any standard?
Yes. Yes.
Where?
Ind AS 115. Ind AS 115.
Yes, 115 it was there. Ind AS 16 and 38. What about 1638?
16.
Yes, sir. Yes, sir. It is there as well in all 3 standards.
Yes. So Megha, you remember when the PPE was acquired or intangible asset was acquired on deferred payment term, what was the treatment? It was, when it was acquired on a deferred payment terms, the measurement, the cost of the PPE, cost of intangible asset was on the normal purchase price, cash price equivalent, okay? And the money paid, the consideration paid versus the cash price equivalent, the difference has gone to the finance cost, right? If you have acquired an asset with an extended credit terms, right? I went to buy a car. I asked, what is the price of the car? The showroom dealer told me the price of the car is 9 lakh rupee. I told him I will pay you after 1 year. He told me the price of the car is 10 lakh rupee. What is the cash price equivalent? 9 lakh. What is the consideration paid? 10 lakh. It is on extended credit term. So 10 minus 9. So this PP 9 lakh, the car will be measured at 9 lakh rupee. Where 1 lakh rupee will go? It will go to finance cost. Right? Likewise, if I am buying a inventory, for example, I am a trader. I am trader of laptop. Okay. I went to buy a laptop and it is held for sale in the ordinary course of business and these laptops are inventory. So I asked for a credit and the manufacturer or the wholesaler told me that we only provide 15 days credit. But I am asking 1 year credit. I am asking for a 1 year credit. Right? I am asking for a 1 year credit. Friends, in this case, since I am asking for a 1 year credit, it is beyond a normal credit term, right? आपको पता है ना credit term होता है market में?
Yes sir.
Right?
Yes.
There is a
Sir,
credit term in the market. Okay? It
अगर
is not.
बियॉन्ड ऐसा क्रेडिट हुआ तो जैसे हम लोग इंटरेस्ट का करते थे वैसा करेंगे क्या फिर?
Yes, yes. So since in this example, I am purchasing this inventory laptop beyond credit term and I'm paying extra. So what is this extra? This extra will be considered as a financing element. This extra will be considered as an interest cost. Okay. Right. Discount and rebate on purchase. trade or volume discounts and rebates are deducted from the cost of purchase. Trade discount and rebates. Have you heard about this word in any measurement of the asset?
Yes, sir. A16 and a 38.
Ind AS 16 and Ind AS 38 also, where it is purchase price including import duty and non-refundable taxes less trade discount and rebates. Okay. Same way. So cost of purchase, deferred payment, discount and rebate on purchases. So this will be considered like that only. Okay. So your inventory has to be your purchase price plus transport and handling cost plus non-refundable taxes minus trade discount and rebates plus any directly attributable cost, right? And if inventory has been procured beyond extended credit terms, right? On the extended credit terms, beyond normal credit terms, whatever extra you are paying, that is considered like an interest cost. Okay. Yes. Now coming to the cost of conversion. What is meant by cost of conversion? क्या मतलब होता है cost of conversion का?
Manufacturing cost and other
Cost of, yes,
manufacturing
cost of production or cost of conversion includes all direct cost, right? Cost of conversion means which is converting your raw material into what? Into finished goods, right? So
Yep.
when you are incurring a cost, which will convert your raw material into finished goods, this is known as a cost of conversion. Okay, right? So cost of production or conversion include all direct costs such as labor, material, and direct overheads, and an allocation of fixed and variable production overheads. Right? So there are two kinds of overheads. One, direct overheads, labor, material, right? And direct overheads. Labor, material, and overheads. ये पढ़ा होगा ना आपने कॉस्टिंग में पढ़ा था लेबर मटेरियल
Yes,
डायरेक्ट
sir.
ओवरहेड्स yes or
Yes.
no
Yes.
right
Yes.
yes so number one is direct, number two is allocation of fixed and variable production overheads. Allocation, for example, for every unit of production, you have to pay, let's say you have to pay a non-refundable tax. जैसे होता है ना चुंगी, have you heard about चुंगी, कर, सेस, CESS, right? So for example, for every unit produced, you have to pay 5 rupee of cess to the government, and it is non-refundable. So what is that? That is a cost. And this is fixed. Per unit. So what is this cost? This is fixed cost or variable cost?
Variable cost.
Variable cost, right? Variable cost. If you produce 100 quantity, you have to pay 500 rupees. If you produce 500 quantity, you have to pay 2500 rupees, right? It's a variable production overhead. And an allocation of fixed and variable production overhead. So variable production overhead varies with the quantity, but it is fixed per unit. Correct? You are paying a rent of the factory in which the production is going on, in which the inventories are getting produced. Okay? Or depreciation and maintenance of plant and machinery. From which the inventories are getting produced. Is it a fixed overhead or variable overhead?
It's a fixed overhead.
फिक्स्ड ओवरहेड. फैक्ट्री का रेंट, अगर फैक्ट्री का रेंट 1 लाख रुपए है तो ये 1 लाख रुपए होगा अगर 10,000 यूनिट प्रोड्यूस्ड होती हैं, और अगर 20,000 यूनिट प्रोड्यूस होती है तो क्या ये डबल हो जाएगा? वेदर फैक्ट्री रेंट विल डबल इफ द प्रोडक्शन विल डबल,
नहीं सर, उतना ही रहेगा.
or whether factory rent will half or it will become zero when there is no production, when the labor goes on strike.
No, it has to be
No?
paid.
नहीं होगा ना?
No.
Anyone who is living in a rented accommodation? Anyone here?
Yes,
Yes,
sir.
sir. I am living in rented.
Saminathan. Okay. He is living in a rented accommodation. So Saminathan is living in a rented accommodation, and he took a premises on rent for the CA preparation. And after exam, he will move to his house. He will go to his house for 1 month, and his rental premises is getting locked. So Saminathan, are you paying rent for that 1 month for which that house is locked?
Yes, sir. I need to
Of course, yes. He is not using that house for that month, but he is paying rent. So fixed production overhead is fixed in totality, right? So it doesn't matter, you're using, you are not using, you are more using, you are less using, doesn't matter, right? So fixed overhead is fixed. So friends, if I talk about cost of conversion or production, cost of production or conversion include the direct cost like labor, material, overhead, direct overhead, and allocation of fixed overhead and variable overhead, right? So variable production overhead is fixed per unit, but fixed overhead is fixed in totality, like factory rent, depreciation, maintenance, etc., etc. These include the depreciation and maintenance of factory building and equipment, amortization of intangible assets such as software used in production process, and the cost of factory management and administration. Labor cost includes taxes and employee benefit cost associated with labor that is involved directly in the production process. Okay. Now, what is allocation of fixed overheads? This is very, very important. Variable overhead allocation is like a cakewalk. It's a fixed per unit. जितने यूनिट प्रोडक्शन होंगे उतना ही आपका वेरिएबल प्रोडक्शन ओवरहेड बढ़ता जाएगा, राइट? सो फ्रेंड्स, how your fixed overhead will be allocated? Tell me how your fixed overhead will be allocated.
No,
So
on the
let
basis
me-
of the normal
Yes,
normal production capacity.
on the basis of normal production capacity. So let me take you on the Excel file. Please let me know if the Excel file is visible. Allocation of overheads. Is it visible?
Yes, visible.
Allocation of overheads. Right. Fixed overheads and variable overheads. Fixed overhead and variable overhead. Fixed overhead is fixed in totality. Variable overhead is fixed per unit, right? Right. So how to allocate this? Let's discuss how to allocate this variable overheads. Just a minute. Yes. Or I can use this thing only. Let me use this example. Yes. So these are the 12 months. This is the production units. This is the variable overhead. And how I have computed the variable overhead? So in the question, it is given variable overhead is rupees 2 per unit, right? So what is my variable overhead? What is my total variable overhead? 2 rupees per unit.
10,000.
10,000. So on and so forth. I'll multiply by 2 rupees per unit. I'll get this variable overhead, right? I'll get this variable overhead. Fixed overhead for the factory. Fixed overhead is the rent of the factory, which is 1 lakh rupee. And normal production unit is 5,000 rupees. And normal production unit is 5,000 rupees. Tell me, how should I allocate this fixed overhead? How should I allocate this fixed
Normal,
overhead?
dividing fixed overheads of 1 lakh by 5,000 units. That comes to 20 rupees per unit, and 5,000 multiplied by production units multiplied by 20 rupees.
So if my factory rent is 1 lakh rupee, normal production unit is 5,000 rupees. So per unit fixed cost. Per unit allocated fixed cost. Per unit allocated fixed cost is equal to normal is equal to fixed cost divided by normal production capacity. So what will be my fixed cost? 1 lakh rupee. What is my normal capacity? Normal production capacity? 5,000. 20 rupee is my allocated. 20 rupee is my allocated fixed overhead. Okay. 20 rupee is my allocated fixed overhead. So allocation of fixed overhead is 20 rupee. Is 20 rupee. Okay. Per unit. 20 rupee per unit. And what is my fixed overhead? 5,000 multiplied by 20. Okay. 5,000 multiplied by 20. Right? ठीक है ना, कोई प्रॉब्लम तो नहीं है इसमें? मेघा,
Yes.
नेहा,
No,
लीला,
sir.
सौरभ, विभू,
No, sir.
संजय, Saminathan,
Fine.
all okay? Yeah?
Yes, clear, sir.
Yes. So now it has increased. My normal production capacity was 5,000 unit. Normal production capacity was 5,000 unit, but now it is increased to 8,000 unit. My actual production is 8,000 unit. So what should I do? I'll allocate it 20 rupee.
No.
So
Maximum
Neha,
you
what should
can
I do?
allocate is
Should I allocate it 20 rupee?
1 lakh.
No, sir.
Why no?
Sir, because rent is fixed and it will be 1 lakh.
Yes, you are right. So if I'll allocate it 20 rupee, what will happen? So 8,000 multiplied by 20. How much cost I have allocated? 160. But what is my fixed cost? 1 lakh, right? So
1 lakh only,
I
yes.
cannot allocate more than my fixed cost. मैं इन्वेंट्री पे उससे ज्यादा तो allocate नहीं कर सकता ना, right? It means it is not right. It is not right. So you have to allocate your fixed overhead on the basis of normal production capacity. But what happened if your actual production is more than the normal production? What happened? If your actual production is more than the normal production, then
To be allocated on
Then-
normal production only.
it will be allocated on the actual production. Then my fixed cost is 1 lakh rupee only because it is fixed in totality. Divide by 8,000. So I will allocate 13 rupees per unit of production. So this multiply by this will give me 1 lakh. Is that clear? Is that clear? Yeah. So
Yes, sir.
friends,
Yes.
when so let me give you the guidance here also. So guidance on allocation of fixed overhead. Guidance on allocation of fixed overhead. Number one, when, so we discussed that it has to be allocated on normal production capacity, right? When actual production is equal to normal production, then allocate on the basis of normal production. Right? Number two, when actual production is more than the normal production. What is the sign of more than? This is the sign of more than. When actual production
sir.
is greater than the normal production, right? यही साइन है ना? गलत तो नहीं लिखा मैंने?
No, it's right.
When actual production is greater than the normal production, then तो क्या होगा? What will happen? When actual production is more than the normal production, तो
On
allocation
the
किस पे
basis of
होगी? Normal पे ही होगी.
normal production.
Allocate on the basis of actual production. अभी तो किया
कम कर
8,000
दीजिए।
पे.
हाँ सर, कम कर दीजिए।
संजय अभी किया ना 8,000 पे. 8,000 is greater than the 5,000 of normal production ना? यहां पर क्या किया?
Yes.
यहां पर actual production is equal to normal production. So what we did? We allocated on the basis of, then allocated on normal production. But your actual production is greater than normal production, then अभी हमने क्या किया? Then allocated on actual production. यही किया है ना?
Yes.
Allocate on the basis of actual production. Actual. Friends, now in the next month, in the third month, it becomes 1,000 unit only. It becomes 1,000 unit only. The normal capacity was 5,000 unit. But the labor went to strike and the company was able to manufacture 1,000 unit only in the third month. What should we do now? क्या करें?
And now on the basis of normal production, actual production. Not actual, normal production. You will take complete 1 lakh rupees.
Yeah. So you remember normal cost, abnormal cost needs to be charged to P&L, abnormal cost, right? And normal cost has to be capitalized. So in this case, if labor goes to strike or if the normal production capacity is 5,000 unit, but the company is not able to manufacture 5,000 unit, the company has been able to manufacture only 1,000 unit, which is way lower than the normal production capacity. The actual production is way lower. It is much lower. Then what happened? It is much lower than what happened. It means there is inefficiency. It means there is an inefficiency. It means there is inefficiency. Okay. If there is an inefficiency, so that inefficiency should go to the P&L.
P&L.
So, right, it is a loss, na? Otherwise, what you will do? Your inventory cost will become higher. If I will allocate 1 lakh, divide by 1,000. So I will allocate 100 rupees in the cost of inventory. And then inventory will get impaired. Yes or no?
Yes, sir.
Yes.
Maggie, for example, Maggie. Nestle is producing Maggie every month. Okay. Nestle has 100 crore of fixed overhead. 100 crore of fixed overhead. So in the first month, Nestle has produced, let's say, 20 crore of Maggie packet in the first month. So how much cost is allocated to the Maggie? Normal production is also 20 crore packet. 5 rupee? 5 rupee per packet? Yes. So
Yes.
normal production is 20 crore packet on a monthly basis, and Nestle has also produced 20 crore packets. In the second month, Nestle has a very efficient production and Nestle has surpassed the normal production capacity, and Nestle has actually produced 25 crore Maggie packet. In the summer season, during the summer vacation, Nestle has produced 25 crore Maggie packet. the fixed cost is 100 crore only. So how much is allocated? 4 rupee per unit. 4 rupee करोगे ना, 5 तो कर नहीं सकते ना, because
Yes.
as Neha told sir, total fixed rent is only 1 lakh rupee. So in this case only 100 crore rupees. And this 100 crore rupees you have to allocate evenly on all the units produced, right? You have to produce evenly on all the units produced, yes or no?
Yes.
करोगे ना? In the third month, due to some labor strike, due to some other issues, Nestle was able to produce only 1 crore unit. So will you allocate 100 rupees per packet of Maggi? 1 crore, 100 crore divided by 1 crore, 100 rupees. समझ में आता है?
No.
100 rupees allocate करेंगे. So the
No, sir.
Maggi which was produced in April and May will be sold at 11 rupees per packet. देखा ना मैगी का पैकेट 11 रुपी का आता है, 11 या 12 रुपी, I don't know. So Neha, what is the cost of the Maggi packet?
Sir, 12 rupees.
12 rupees. So for April and May month, Nestle is selling Maggi at 12 rupee. For June month, Nestle will sell Maggi at 112 rupee.
Nobody will buy.
Yeah. So you guys will purchase. So you are the CA final student. You will go to the shop and you will ask which month production is this? Is it June month production? Okay, I'm ready to pay 112 rupees because the production was less. Will you do that? Of course, no. Of course, no. Second, whether Nestle will be able to sell that? Answer is no. Nestle, if 12 rupees is the price of the Maggi, how come Nestle will be able to sell it 112? तो क्या होगा? Impairment होगा, because NRV, net realizable value is 12 rupee only. Customers are ready to pay 12, not 112. So if Nestle will allocate when the actual production is lower than the normal production, and if Nestle will allocate the fixed overhead on the basis of actual production, then what will happen? Then the impairment will happen, because NRV is way less than this. Okay. So friends, that is why when the actual production is lower than the normal production, then the fixed overhead has to be calculated on the basis of normal production per unit. So on the basis of normal production per unit, what is my per unit cost?
20 rupees.
So what is my allocation of fixed overhead? 1000 multiplied by 20. 20,000. Where 80,000 will go? My cost is 1 lakh. I have allocated only 20,000. Where 80,000 will go?
It will go
Statement of
to
profit and loss.
It will go to profit and loss. So my dear friends, when actual production is lower than normal production, then allocated cost will be on the basis of allocated on the basis of normal production, and difference of 80k in this case will go to P&L, right? Saminathan, is it clear now or not clear? When actual production is lower than the normal production, then allocate on the basis of normal production. Okay.
yes, sir.
Friends,
It's clear.
is that clear?
Yes, I usually stuck here only, sir.
Yeah. Okay. So will you be able to remember that Maggi example?
Yes, sir.
sir.
Yes.
It's a
Yes.
That is why in case of actual production, when it is lower than the normal production, you have to allocate on the basis of normal production, like 20 rupee per unit. Okay. Great. So now let's go to the PPT. Yes. Example from ICAI study material. Pluto Limited has a plant with normal capacity to produce 5 lakh unit of a product per annum. And the expected fixed overhead is 15 lakh rupee. Right? So normal capacity 5 lakh, fixed overhead 15 lakh, 15 by 5. 3 rupees per unit is the fixed overhead on the basis of normal capacity. Right? Now there are scenarios. So what is my fixed overhead? 15 lakh rupee. It will be fixed in totality. What is my normal production capacity? 5 lakh unit. So what is my fixed overhead allocation per unit?
3 rupees.
3 rupees on the basis of normal production capacity. Now actual production is also 5 lakh unit. Actual production is 5 lakh unit. Fixed overhead on the basis of normal capacity and actual overhead will lead to the same figure of 15 lakh rupee. Therefore, it is advisable to include this on normal capacity. When your actual production is equal to normal production, then you will allocate on the basis of normal production, right? दोनों same ही है, दोनों same ही है, correct? But as a formula, when actual production is equal to normal production, you will go with the normal production. Right? Case 2. Actual production is 3,75,000 units. Means lower than the normal production. It is lower than the normal production. So, if your actual production is lower, whether your fixed overhead will lower? Answer is no. Your fixed overhead will not change, right?
Yes.
So,
Yes, sir.
क्या करें?
On the basis of normal production.
On the basis of normal
actual. Sorry.
यार remember Maggie, हमने actual पे किया था 100 crore divide by 1 crore किया था. 1 crore unit was less than the normal production unit.
Yes, sir. Here the Maggie example will help us.
5 lakh was the normal capacity. Plant capacity होती है ना, हर किसी की capacity होती है. Plant capacity is 5 lakh unit. Actual production is 375, which is lower. Actual production is 3,75,000 units.
सर नॉर्मल पे करेंगे, जो बचा हुआ रहेगा उसको हम लोग
P&L में लेके जाएंगे. Very good. So basically in this case, my actual production is lower than the normal production. So we will allocate on the basis of normal production. So what is my allocation per unit on the basis of normal production? 3 rupees. If I will multiply 375 multiply by 3, what will I get? 11,25,000. But my fixed overhead is 15 lakh. So where the balance of 375 will go? The balance of 375 will go to the P&L. Sanjay, any problem here? Manish, Saurabh?
No, got it.
Any problem?
No.
Any problem, guys? No? Very good. Yes.
No, sir.
Now, third scenario. Actual production is 7,50,000 units. It is more than the normal production. अब क्या करें?
Then we will do the 15 lakhs divided by 7.5 lakhs.
Exactly. It is more than the normal production, and on every unit you have to charge this fixed overhead, right? So 15 divided by 7.5, because if now you will do on the normal production, then what will happen? 7,50,000 multiplied by 3. It will come at 22,50,000, but your fixed production overhead is only 15 lakh rupee, right? It will not go beyond 15 lakh rupee. So if your actual production is more than the normal production, then allocate on the basis of actual production. जब आपका प्रोडक्शन ज्यादा होगा तब आप क्या करोगे? एक्चुअल के बेसिस पे करोगे. अगर आपका प्रोडक्शन नॉर्मल के बराबर है या नॉर्मल से कम है तो आप नॉर्मल पे करोगे, राइट? क्लियर?
Yes, sir.
Here your allocation is 2 rupee per unit. Right, Sanjay?
Yes, right.
Okay. Saurabh, I hope it is clear to you as well. Manish?
Clear.
Okay. Now talking about the cost of inventories, which should not be included as a cost of inventory, right? Yes. And what is that? What is that? abnormal amount of wasted material, labor or overheads. Abnormal amount. Recently we have seen the abnormal loss. Abnormal loss is not going to be capitalized as a cost of inventory. Abnormal loss has to be charged to P&L as and when it incurred. So Megha, do you have any question? Megha is saying it is as when total unit of production increase, per unit cost reduces. Yes, you can say that, Megha. Okay, yes, you are absolutely right, Megha. Yeah. So abnormal amount of wasted material, labor or other production cost. This is not included in the cost of inventory. Storage cost. Unless those costs are necessary in the production process before a further production stage. So the company has produced 50 crore packets of Maggi and the company has stored in the warehouse and the company is incurring a warehousing cost. Whether that storage cost, whether this warehousing cost will be capitalized as a cost of inventory?
No.
No, answer is no. Right? Why? Because the storage cost will not become part of the cost of the inventory until and unless this storage cost is necessary in the production process before a further production stage. Until and unless this storage cost is necessary in the production process before a further production stage. Means, for example, for manufacturing whiskey, for manufacturing pickles, you need to store it for a longer period of time, right? Or for manufacturing ice cream, you need to store for a longer period of time for a very kind, for a low temperature in a refrigerator. You have to store in a refrigerator, right? So if this storage cost is an incidental part of bringing that inventory into a sellable condition, then that storage cost will become part of the cost of the inventory. Otherwise not, right? For example, whiskey, Old Monk. For example, pickles. So as the nature of the product is concerned, these has to be stored for a longer period of time for getting it matured as a good product. Okay. Those storage costs, if it is a directly attributable cost, if it is incidental to the bringing the inventory into the location and condition of sale, then it will become the cost of inventory. Otherwise, storage cost will not become part of the cost of the inventory. Okay. Administrative overhead. Audit fee. You guys are the auditors, right? So whether your audit fees is allocated on the Maggi packets.
No, sir.
So administrative overhead, finance department expenses, head office expenses, these are not allocated. Okay. Selling cost. So Amitabh Bachchan, Mr. Amitabh Bachchan, Shah Rukh Khan, Ajay Devgan, they are promoting, they are doing a branding, they are doing brand promotion, they are promoting a product. So whether the money which is given to them, Virat Kohli is branding Adidas, Nike, for example. So the 50 crore rupees paid to Virat Kohli, whether it will be capitalized on the Maggi packets or on the Nike shoes?
No, sir.
Answer is no. So these costs will charge to P&L. These costs will not be getting capitalized to inventory. These will getting charged to P&L. Where these costs will go? These costs will go to P&L. Okay. These costs will charge to P&L. Right? Clear?
Clear.
Yes, sir, clear.
Very much clear?
Very much.
Sir, in case of overhead loading, when we calculate, then we will also do not include employee cost and admin cost.
Where? Sorry?
When we calculate overhead loading, sir, as per in Ind AS, then we will also do not include admin charges and employee expenses.
We will not include. So these costs are not going to be allocated, right? These costs are not the cost of inventory. So allocation का तो नाम ही खत्म हो गया, right? So these are the exclusions. Okay. Number two, like laborers. Laborers who are directly engaged in the production process is already charged to the inventory cost ना. वो तो आपकी कॉस्ट में ही आ गया ना. कॉस्ट ऑफ कन्वर्जन में हमने क्या पढ़ा था कॉस्ट ऑफ प्रोडक्शन में? लेबर मटेरियल डायरेक्ट ओवरहेड. For example, you are manufacturing a mobile phone, and for manufacturing a mobile phone, you are using some chips, you are using some wires, you are using some glass, plastic. So these are the direct material, and the labors which are engaged in the production. So what is the job of these labors? These are directly related to the production. Okay. So this is the direct labor, direct material. वो तो cost of inventory होगा ही होगा. But for example, when you become a chartered accountant, you will become a finance manager of that company, and you are maintaining the books of accounts. Whether your salary will be charged to the inventory, answer is no. Whether your salary will be allocated to inventory, answer is no, people, because this is like a admin cost. Okay.
Okay,
Vivek,
sir.
clear or
Clear, sir.
clear?
Clear, sir.
Clear in mind ना?
हाँ
ये
हाँ
देखो ना,
सर,
लिखा है
क्लियर इन
ना,
माइंड. क्लियर
कॉस्ट
इन
ऑफ
माइंड.
कन्वर्जन और प्रोडक्शन लिखा है ना. कॉस्ट ऑफ प्रोडक्शन और कन्वर्जन इंक्लूड्स ऑल डायरेक्ट कॉस्ट लाइक लेबर, मतलब सैलरी किसकी, कौन से एम्प्लॉय की सैलरी, जिनको वेजेस मिलती है, जिनको जो डायरेक्टली मैन्युफैक्चरिंग से रिलेटेड है, मटेरियल एंड डायरेक्ट ओवरहेड्स. ओके. यस. राइट. Yes. So friends, this is let's discuss this illustration number 3 also. As per Ind AS 2, selling cost are excluded from the cost of inventories and are required to be recognized as an expense in the period in which these are incurred. Whether the distribution cost would now be included in the cost of inventory under Ind AS 2?
No.
No. Selling and
No.
distribution cost are generally used as a single term because both are related. As selling costs are incurred to effect the sale and the distribution costs are incurred by the seller to complete a sale transaction by making the goods available to the buyer from the point of sale to the point at which the buyer takes a possession. Since these costs are not related to bringing the goods to their present location and condition, the same are not included in the cost of inventories. Accordingly, though the word distribution cost is not specifically mentioned in Ind AS 2, these costs would continue to be excluded from the cost of inventories. Right? So, in one word, the answer is no. Right? Answer is no. Okay. Right, friends? So, friends, it's 8:18 now. Let's have a break. Right? It's a small standard, not to worry. And if you have any doubt so far before the break, if you have any doubt, we'll discuss that. Otherwise, after the break, we will cover the most important concept under this standard, which is joint product and byproduct. Any question up to this level, friends?
No, sir.
No question.
No any question? So let's have a 15 minutes break. It's 8:19 now. We'll start at 8:34. Okay. We'll start at 8:34. Right? Okay. Break start.
Yes.
Friends, one of the most important concept, if a question will come in the exam and if that question has a level, I must say that question will be from joint product and byproduct, I must say. And what is this? So Megha is, sir, unloading of raw material is equal to cost of production, loading of finished goods after production. So Megha, I'm not clear about your query. So might be if you will ask your query, I will be able to make it more clear. Yes. Friends, what is meant by joint product and byproduct? Have you heard about joint product, byproduct? Have you heard about this
Yes, sir.
concept
Yes.
of anyone?
Yes, in
Yes,
cost
sir. In
accounting.
costing, we have done joint product and byproduct.
Okay. Can you take an example of joint product and byproduct? So let me take an example of joint product and byproduct. What happens with the joint product and byproduct? So let's say if you are exploring something or if you are creating or manufacturing a product, right? You have incurred some expenses, you have incurred some labor, material, overhead, and yet you are creating one product. When you are creating one product, you are getting another product also, right? So that is known as a byproduct or that is known as a joint product. So friends, let's say if you are exploring oil well, right, for the purpose of getting petrol. So you are getting petrol, you are getting a diesel also. Okay. So what is this? This is a joint product, right? Petrol is 95 rupees per liter. Diesel is almost 86 or 85 rupees per liter, right? So both the product has a significant value. So it is a joint product. Okay. And when you are exploring, you are also getting some dirty kind of a fuel, right? So you are also getting some another form of a fuel, which is known as a kerosene. So what is that kerosene? That kerosene is also a kind of a joint product. Okay. What is the difference between a joint product and a byproduct? So joint product has a significant value like the main product, but byproduct has a very insignificant value. Byproduct has a very insignificant value. Okay. For example, petrol and diesel has a significant value, but kerosene has a, let's say, very insignificant value. Okay. So like scrap, when you manufacture anything, you get some scrap also. Okay. So when you like Amul is getting a cheese and butter from the milk, right? These are the joint product. But when the Amul is, Amul is processing the milk for the purpose of butter and the cheese. So, the Amul is also getting some, what should I say, some residual of the milk, residual from that milk, right? Which can also be used as a scrap or which can also be used in some other products like charch. Okay. So friends, one product is getting manufactured, two or more products are getting emerged out of that production process. Okay. And the biggest problem is the identification of cost was not there. For example, when you are exploring and you are getting petrol, diesel, and kerosene, you don't know what is your cost of inventory for petrol, what is your cost of inventory for diesel, and what is your cost of inventory for kerosene, right? So the cost is common. The cost is common. So the question comes, while you know the sale price, like diesel is selling at 85 rupees, petrol is selling at 95 rupees, kerosene is selling at, let's say, 25 or 30 rupees. You know that. But you don't know the cost of the inventory. You don't know the cost. So this standard guides you when more than one product is produced in the process and that product is a joint product or that product is a byproduct, right? That product is a byproduct. Then how to allocate the cost, how to measure the cost of inventory in case of a joint product and in case of a byproduct. Okay. Right? Is that clear? Yeah.
Yes, yes,
Joint
clear.
product has a significantly more value than the byproduct. Okay. So friends, if the outcome is a joint product, for example, petrol and diesel, if the outcome is a joint product, then when the cost of conversion is separately identifiable, तो क्या करेंगे? पता है मुझे cost of conversion भी, मुझे उस इन्वेंट्री की कॉस्ट पता है, तो बहुत अच्छी बात है. If it is separately identifiable, तब तो प्रॉब्लम खत्म, right? Then cost of each product is based on the separate cost incurred. If there is a joint product and cost of conversion is separately identifiable, then use that cost for measuring the inventory cost for the joint product, right? But the problem is when the cost of conversion is not separately identifiable. For example, the company has incurred a cost of 10 crore rupees. The company has incurred a cost of 10 crore rupees. Okay. The company has incurred a cost of 10 crore rupees. And by incurring a cost of 10 crore rupees, the company got 1 lakh liter of petrol and let's say 50,000 liter of diesel. But company don't know that how this 10 crore is allocated to the petrol and how this 10 crore is allocated to the diesel. The company don't know. It's a common cost, right? So now we need to allocate that. So standard says that the allocation of cost is on the basis of relative sales value of each product, either at the stage in the production process or when the product becomes separately identifiable or at the completion of production. So standard says that since the cost is common, you don't know the cost, you can allocate this cost on the basis of relative sales value. You can allocate the cost on the basis of relative sales value. Okay. आप किस बेसिस पे कर सकते हो? रिलेटिव सेल्स वैल्यू के बेसिस पे आप इसको एलोकेट कर सकते हो इस कॉस्ट को. ओके. कैसे करेंगे? आई विल डिस्कस विद द हेल्प ऑफ वन इलस्ट्रेशन. ओके. But to cut a long story short, my dear friends, when the outcome is a joint product and the cost is separately identifiable, please go ahead and use that separately identifiable cost for that inventory. But when the cost of conversion is not separately identifiable, then allocate the fixed cost into the joint product on the basis of in the ratio of sales value. Okay. But what happens when the outcome is main product with a byproduct? When you manufacture, you will always get a byproduct like scrap. You will always get. So what you will do? When the byproduct is immaterial like scrap, then byproduct is measured at NRV and this value is deducted from the cost of the main product. For example, the cost of the main product is 10 crore rupees and the byproduct is immaterial, it's a scrap. It is getting it sold at 5 lakh rupees. So what is the accounting treatment? The net realizable value of the byproduct will reduce from the cost of the inventory, cost of the main product. So 10 crore minus 5 lakh rupees, 9 crore 95 lakh will become the cost of the main product. But when byproduct is material, like kerosene, for example, kerosene is also material. Kerosene is sold at 30 or 40 rupees per liter. In that case, that byproduct will be treated like a joint product. Okay. That byproduct will be treated like a joint product. So in that case, whatever is the cost of the production, cost of conversion, whatever is the cost of conversion, it is getting allocated in the ratio of the sales price, in the ratio of the sales value. Friends, as a theory, as a concept, is it clear to you or it is not clear to you? Please tell me. I will explain with the help of an illustration. Okay. But as a concept, as a theory, is it clear?
Yes, sir.
Yes, sir. Clear.
So let's discuss illustration number 4 from ICAI study material. In a manufacturing process of Mars Limited, one byproduct BP is a byproduct, okay, emerges besides two main product. So in this question, there is a joint product also, there is a byproduct also, okay. Besides two main product MP1 and MP2 apart from scrap. Okay, apart from scrap. Details of cost of production process are as under. Raw material 14,500 unit, 1,50,000 rupees amount. Wages 90,000, fixed overhead 65,000, variable overhead 50,000. MP1 main product 1, 5,000 units, 250 is the value of the closing stock. 250. Okay. So main product 2, 4,000 unit, 100 is the closing stock, right? So BP 2000 unit, okay, no value is given. BP 2000 unit, no value is given, right? Average market price of MP1 and MP2 is 60 per unit and 50 per unit respectively. So market price of MP1 and MP2 is 60 rupee per unit, 50 rupee per unit respectively. Byproduct is sold at the rate of 20 per unit. The value of byproduct is 20 rupees per unit. There is a profit of 5,000 on sale of byproduct after incurring separate processing charges of 8,000 and packing charges of 2,000. 5,000 was realized from sale of scrap. So there was a scrap also. So 5,000 is realized from sale of scrap. And there is a profit of 5,000 on sale of byproduct. Okay. After incurring separate processing charge of 8,000 and packing charge of 2,000. So after incurring this 10,000 rupees of cost, there is a profit of 5,000 on the sale of byproduct. Okay. Calculate the value of closing stock of MP1 and MP2 as on 31st March 2001. So let me solve this question on the Excel file. Please confirm if my Excel file is visible. Please confirm if it is visible.
Yes, visible.
Yes. Concept of joint product and byproduct. Okay. So friends, in case of joint product JP, in case of joint product, in case of joint product, if the conversion cost is separately identifiable, then use the cost for measurement of inventory for that joint product. If it is not separately identifiable, if the conversion cost is not separately identifiable, then allocate the cost on the basis of sales value, right? In case of byproduct, if the byproduct is immaterial, then reduce the NRV of byproduct from the cost of main product, right? If the BP is material, then तो क्या होगा अगर BP material होगा तो then
Treat it as main product.
Then treat this as a joint product and apply the concept of joint products, right? Okay. Now let's discuss this illustration number 4. What was the number of this illustration? Illustration number 4. Illustration 4. In this illustration 4 of ICAI study, in this illustration 3-4 things are there. इस illustration में क्या है? There are main product means joint product, MP1 and MP2. There is a byproduct also, no? There is
Yes,
a
sir.
byproduct,
Yes, sir.
BP. And there is a scrap also in this question, right? These 4 things are getting emerged in this question, right? Okay. So first of all, joint product, there is no common, so there is no separately identifiable cost is given. Okay. So we need to allocate the cost between the joint product, and what we need to do? We need to reduce
Sales
we need to
value.
reduce the sales value of byproduct and scrap from the cost of the main product, right?
Yes, sir.
Correct? Is that clear?
Yes, clear.
Yeah. Okay. So friends, first of all, what else is given in this question? In this question, it was given that the average market price of MP1 and MP2 is 60 and 50 rupees per unit. Byproduct is sold at 20 rupees per unit. What was the unit of byproduct? What was the unit of byproduct?
2000.
2000 unit. Total unit of byproduct was 2000 units. सबसे पहले calculate the NRV of byproduct. Okay. Byproduct BP. So calculate the NRV of byproduct BP. Okay. Sale price of BP. It was how much? It was 2000 units.
20 rupees.
Unit multiply by 20 rupees per unit.
20 rupees.
Right? Multiply by 20 rupees per unit. ₹20 per unit. So what is the amount? 2000 multiplied by 20. In the question, it was written that it is sold at 20 rupees per unit. There is a profit of 5,000 on the sale of byproduct after incurring separate processing charge of 8,000 and packing charge of 2,000. After incurring separate processing charge of 8,000 and packing charge of 2,000. So less processing charge, right? करेंगे ना less?
Yes, sir. Yes.
उसके बाद क्या था? Packing charge. What was the cost? The cost was
8,000
minus
and 2,000.
8,000 and 2,000 minus 8,000 and minus 2,000. ये जो 5,000 का प्रॉफिट दिया था, इसका कुछ करना है क्या? इसका कुछ करना है?
नहीं सर.
आपको तो सेल्स वैल्यू से मतलब है ना, राइट?
Yes, sir.
आपको तो सेल्स वैल्यू से मतलब है. यू आर कंसर्न्ड अबाउट द सेल्स वैल्यू, करेक्ट? Okay.
Correct, sir.
So what is my NRV? What is my NRV of byproduct? What is my NRV? My NRV of byproduct is NRV of byproduct is how much? 30,000 rupees. NRV of byproduct is 30,000, right? NRV of byproduct is 30,000. And I have a sale of scrap also. In the question it was written 5,000 was realized from sale of scrap. And what is the value of the sale of scrap? Given in the question? 5,000, right? This is given in the question. In the question. Yes or no? ये तो question में दिया है ना?
Yes, sir.
दोस्तों? Yes, given.
Given in the question, na? Now I need to compute my cost. First of all, I need to compute my cost. Otherwise, I'll not be able to compute my inventory, right? What is my inventory of MP1 and MP2? Value of the inventory. I'll not be able to measure. So first I need to compute my total cost. Okay. So calculation of cost of conversion. Cost of conversion, right? Calculation of cost of conversion. For cost of conversion, how much was the cost of the raw material? Some raw material cost was given. Let me see.
1,50,000.
1,50,000.
14,500 units.
1,50,000 was the raw material cost. Okay. Some wages were also given. What was the
Yes,
cost
sir.
of the
It's
wages?
90,000. Wages 90,000.
90,000.
Then what next? Wages के बाद
Fixed
क्या है?
overhead 65,000.
Fixed overhead 65,000 and variable overhead.
Variable overhead 50,000.
Fixed overhead and variable overhead and variable overhead. 65,000 and 55.
50,000.
50,000.
50.
50.
65,000 and 50,000. Okay. Yes. उसके बाद less NRV of byproduct and less sale of scrap. This is something which you are getting out of this production process. Yes.
Yes, sir.
Minus 30,000 and minus 5,000. Okay. So what is your total cost? What is your joint cost? What is your total cost of conversion? Your total cost of conversion. Joint cost of conversion, right? Total joint of cost of conversion. Total joint cost of conversion. Any doubt up to this level? Any doubt, friends? अभी तक कोई doubt
No.
है यहाँ पे?
No doubt.
Yes, sir.
No doubt? Okay. I think it is clear as of now. Yes. Okay. Now we need to what we need to do? We need to allocate this
Okay.
cost. We need to determine the basis of allocation and we need to allocate this cost. Okay. We need to allocate this cost. Allocation of joint cost of conversion into MP1 and MP2. MP1 and MP2. MP1 and MP2. Okay. So MP1 and MP2. MP1 and MP2. MP1 and MP2. Now, what is my output? What is my total output for MP1 and MP2? It was given in the question. 5,000 and 4,000 units.
Yes, sir.
5,000 unit and 4,000 units, right? My output
Yes, sir.
in units. 5,000 and 4,000. Then what is my sale price? It is given in the question that average market price of MP1 and MP2 is 60 rupees per unit and 50 rupees per unit respectively, right?
Yes.
Sales price per unit. 60 rupee and 50 rupee. Okay. 60 rupee and 50 rupee. What is my sales value? What is my sales value?
20,000, 20,000. 3 lakh, 2 lakh.
3 lakh and 2 lakh. This is my sales value, right? Just a minute. This is my sales value. Okay. What is my sales value? Total sales value is 3 lakh rupee and 2 lakh rupee. And friends, what is my total cost of conversion? My net cost of conversion? 3,20,000 rupees.
3,20,000.
So now this 3,20,000 rupees has to be allocated in which ratio? In which ratio? What is my ratio of allocation?
3:2.
Allocation ratio. Allocation ratio. My allocation ratio is what? my allocation ratio is what? Is 3:2. My allocation ratio is 3:2 is my allocation ratio, right? 3:2 is my allocation ratio. Correct? 3:2 is my allocation ratio. So what is my joint cost? What is my allocated cost? What is my allocated cost?
3,20,000.
मेरी allocated cost क्या होगी?
Total
My
1,92,000.
allocated cost. My allocated cost is 3,20,000 multiplied by 320 multiplied by 3 divided by 5. Okay. Same. Multiply by 2 divided by 5. Yes. 3,20,000. 3,20,000 multiplied by 2 divided by 5. 1,28,000, right? So this is my allocated cost, right? Now the question is asking for the value of the closing stock. And the question is given the closing stock units also, 250 and 100 units. Okay. 250 units and 100 units of closing stock. Okay. So friends, what is my cost of the closing stock? What is my cost per unit? What is my cost per unit? Tell me. मेरी per unit की cost कितनी है?
Sir, 1,92,000 divided by 5,000.
Yes, 1,92,000 divided by 5,000.
38 point.
And 1,28,000 divided by what? Divided by 4,000.
32.
Right? So this is my per unit cost. Now, what is my closing units? Now, value of the closing stock. Value of the closing stock of MP1 and MP2. Value of the closing stock of MP1 and MP2. What is the value of MP1 and MP2? Value of MP1 and MP2. Yes. What is my closing units?
250.
250 and 100.
100.
100, yes.
250 and 100,
100.
right? And what is my per unit cost? What is my per unit allocated cost? 38.4 and 32. What is my value of the closing stock?
$9,600, $3,200.
Yes. So friends, let me know if you face any problem, any challenge in understanding this question and in solving this question. Let me know if you have any problem. Please do let me know.
Sir, I was thinking that now we have arrived at first we identified the cost, then we reduced from the byproduct and the scrap value. Instead of that, once we identify the sales volume, and after that, scrap value and the byproduct can be split into the ratio of 5:3. I mean the 3:2. Can we detect that? I was initially thought.
No. So basically, whenever there is a byproduct and whenever there is a byproduct and there is a scrap, first of all, you need to have a net cost, right? You have a net cost. What is your net cost of conversion? What is your net cost of production, net cost of conversion? You have to refer that, right? You can't do like that. You can't do that, whatever is the scrap value and NRV, you need to split between 3:2. Might be answer will remain same, but it is not the right way of doing things, right? So because if the question will come that you need to explain, you need to tell what is the net cost of conversion. Then you will get stuck. Right, Saminathan? Because the
Yes,
net
sir.
cost of
Yes, sir.
conversion is 320. Your net
Yes, sir.
cost of conversion means your total cost of conversion minus NRV of byproduct and scrap value. Okay.
Right, sir. Got it. Thank you so much, sir.
Any other question from anyone? Friends, any other question from anyone? No? No question? Okay. Then let's go to the PowerPoint presentation and let's discuss more concept of Ind AS 2. Yes. So we covered this illustration also. Now coming to the cost formulas. So friends, we discussed that inventory has to be measured at cost or NRV, whichever is lower. So since morning, what we have discussed, we have covered inventory are of three types: raw material, work in progress, finished goods. Then we discussed inventory has to be measured at cost or NRV, whichever is lower. We discussed cost means cost of purchase plus cost of conversion, right? And what we discussed, cost of purchase, cost of conversion, directly attributable cost for bringing the asset into the inventory into the location and condition. Right? Then we discussed what is my cost of purchase, what is my purchase price in case of deferred payment terms, right? Then we discussed what are the costs of conversion, direct material, labor, overhead, your costing concept. And we also discussed how we will allocate our fixed production overhead and variable production overhead. Variable production overhead is per unit fixed, but fixed production overhead you need to allocate on the basis of normal production capacity. But if your actual production is higher than the normal production capacity, then you have to allocate your total fixed cost divided by the actual production. Then friends, we discussed what? We discussed the exclusions like storage cost. Until and unless it is essential to bringing the asset into the location and condition, that storage cost will also not form part of the cost, right? So storage cost is not it will not be included. Admin cost, advertisement cost. So these abnormal losses, abnormal cost, this will not become part of the cost of inventory. Right? Friends, then we discussed. After this, we discussed. So what should I say? Yes. Then we discussed the concept of joint product and byproduct recently, right? Now we arrive at the cost formulas. So we discussed about the cost. Now we discuss the cost formula. So if there is a specific identification, right? So goods or services produced and segregated for specific projects shall be assigned by using a specific identification of their individual costs. Friends, if there is a specific identification of inventory, so you have to measure their specific cost. For example, have you went to a jewelry showroom? Have you went to a jewelry showroom? Anyone? कभी गए हो नहीं गए हो? ज्वेलरी के शोरूम गए हो?
Yes, sir.
Yes. No. So Neha, you must have went to the jewelry showroom, right? Yes or no? So in the jewelry showroom, when you went the jewelry showroom, you have seen there are a lot of necklaces, rings, bracelet. And when you ask for the price of a necklace, for example, a necklace cost you, let's say 2.5 lakh rupee, another one can cost you 3,25,000 rupees. Every necklace has a specific value. Every necklace is made of gold, but the value will be as per the design, as per the efforts, as per the pearls which are put into that necklace, right? So the point is, these kind of inventories like jewelry, so these kind of inventories has to be measured by the specific identification method. Means when you are manufacturing that inventory, that product, that item, you are measuring the cost of the inventory using the specific identification method. Means the companies are tracking the cost of that particular item separately. Okay. You might be surprised to know 100-gram necklace of gold, a 100-gram gold necklace may cost you 5 lakh rupee, and a 100-gram necklace may cost you 11 lakh rupee, 12 lakh, 15 lakh rupee also, depending on the items which have been put in that necklace and depending on the kind of a design, kind of a unique things into that necklace, right? So these kind of items are using as per the specific identification method. But have you seen the car? Have you went to the car showroom or the godown of car, that stockyard of any car dealer? Have you went to the stockyard?
Yes, sir.
Yes, yes.
If you have seen the stockyard, so if there is a Maruti Wagon car or if there is a Maruti Swift car, all white color Maruti Swift car, all identical, all same cars, yes or no? So what you will do? So basically, I went to purchase my Skoda car 3 years back. So that Skoda showroom has a stockyard just near to that showroom. So I told, do you have a white color? Because I need a white color. And in their showroom, what they have, the car which they have, just put as a model is was not a white color car. It was kind of a maroon or red color car. I told I need white color. So they told we have in our stockyard. So I went to their stockyard and there were fleet of white color Skoda car, more than 50 cars. So I don't know out of 50 which car they have given me. So they pick just one car and they clean it and they have delivered it to me. Okay. So all these are identical cars. So when the company is manufacturing these cars, whether company is assigning the value of these cars, the cost, whether the company is tracking the cost of inventory of each car separately. Answer is no. Answer is no. Because all the cars are identical cars, right? So the point is the company is estimating the cost of the car depending on the fixed production overhead, variable production overhead. The company is estimating and allocating the value to the car, right? Because every car has the same value. Every car has the same value. Every car has a similar value. Every car has the same value. Okay. So in these kind of cases, what happens in these cases? Just a minute. Yes. So in these cases, if there is no specific identification, in that case, either FIFO method or weighted average cost formula is required to be used, right? FIFO means first in, first out. Weighted average cost formula means, what is meant by weighted average cost formula? Are you aware weighted average cost formula concept? आपको पता नहीं पता है? पता है? Yeah. So let me give you example of weighted average and FIFO method. Okay, weighted average and FIFO method. For example, just allow me a minute. Example of FIFO and weighted average cost formula. Example of FIFO and weighted average cost formula. So let me copy some element from here. So that it will save time. Let's say in January, the company has purchased 1000 unit. The price per unit is 10 rupee. The total purchase price is how much? 1000 multiplied by 10. Okay. In February, 500 units. The price per unit is 15 rupees. The total purchase price is how much? 7500. In March, the company has sold 100 quantity. In June, the company has also purchased 500 units. The purchase price is how much? The purchase price is 20 rupees per unit. Okay. The purchase price is 20 rupees per unit. The total purchase price is 10,000 rupees. Just a minute. Okay. And in November, the company has sold 400 units. In December, the company has sold 300 units. Right? This is what the company has done. So friends, this is the information which is given. So what is the total units the company has purchased? What is the total units the company has purchased? 2,000 units. 2,000 units the company has purchased, right? 2,000 units the company has purchased. Okay. What is the total purchase price? What is the total purchase price? The total purchase price is how much? 27,500 rupees is the total purchase price. What is the closing units the company has remained? 2,000 units the company has purchased and the total sold is how much? 800. What is the closing stock? Closing stock is 1,200 units, right? Closing stock is 1,200 units. So what is the value of the closing stock? Identify or determine the value of inventory, the value of closing inventory by using, determine the value of closing inventory by using FIFO and weighted average cost formula. Determine the value of inventory by using FIFO and weighted average cost formula. This is what we need to do. Okay. This is what we need to write. Yes. So friends, FIFO method. FIFO. Going by the FIFO method, first of all, first in, first out, means whatever is purchased first will be sold first. Whatever is purchased first will be sold first. So tell me, going by the FIFO method, so let me copy this. Copy.
By FIFO method, 8,000.
By FIFO method, 1,000 unit that I have purchased 1,000 unit in January. Okay. And in February 500, June 500. What is the total unit I have sold? What is the total unit I have sold?
1,600.
I have sold 800
Sorry,
units.
800.
800 units.
800.
800 units I have sold. Okay. So I will assume by FIFO method, my entire sales has been done from which lot? From the January lot.
January.
Lot one.
Yes.
Right? So in this case, minus 800 sold quantity, right? Then what is my price per unit? What is my price per unit?
10.
I have sold this unit is 10. And what is my total sale price? What is my sale price? Not sale price, my cost of sale. Cost of sale, right? It is my cost of sale, correct?
Yes, sir.
It is my cost of sale. So what is my closing? What is my closing inventory from this? From this, what is my closing inventory? Closing
Balance inventory is
inventory.
200 into 10.
Closing inventory is how much? This
200 multiplied by 10.
200.
right? 10 rupee, and this multiply by this.
2,000.
And same way, my closing inventory is this.
500 and 500 is balance.
This
At the rate 50 and 20.
exactly the same, because nothing has been sold out. And again this, right? So this is my 1,200 units. This is my 1,200 units. Okay. And this is my, what is the value? The value is 19,500, right? So what is my, going by the FIFO method, what is my value of the inventory going by the FIFO method? My closing quantity is 1,200 and my value of the inventory is 19,500. What is my per unit cost of inventory? What is my per unit cost of inventory? My per unit cost of inventory is how much? Closing stock value
16.25.
16.25.
19,500 divided by 1,200. This is my per unit. Per unit, okay? Per unit. Total value is, and what is the total value? Total value is 19,500, right? Clear? Now, going by the weighted average formula, weighted average method. What is the value of the inventory going by the weighted average method? क्या वैल्यू होगी? Simple. Copy. I have purchased my 2,000 unit of inventory at 27,500 rupees. What is my per unit of inventory value? What is my per unit of inventory value? What is my per unit of inventory value? It is this divided by this. 14 rupees, right? 14 rupees something paisa. 13 rupees 75 paisa. So going by the weighted average method, so closing stock value as per weighted average method. Right? What is my closing balance of inventory? 1,200, right? So my per unit value is, this is my per unit, okay? And my total value is how much? 1,200 unit multiplied by 13.75. 16,500 is my value of the closing stock going by the weighted average method. Simple. So in weighted average, in FIFO method, what you have done? In FIFO method, you have assumed whatever is my first lot, it is sold first, right? So my closing balance is lying from the last lot, right? But in weighted average method, whatever you have purchased, whatever the different purchases at different rate, you will use those purchases at a different rate to arrive at a weighted average value, okay? And then you apply that weighted average value to the closing inventory, right? You apply that weighted average value to the closing inventory. Yes, Megha, you're right. You have done this in costing also. Yes. Yeah.
Sir, will we take
Yes.
directly all the weighted average, or we will bifurcate when we sold?
Sorry.
Sir, we have taken weighted average for a whole till December. When we get sold in March, will we take the weighted average of Jan and Feb?
Sorry, Bibu, I haven't understood your question. What you are trying to ask?
सर हम लोग डायरेक्ट वेटेड एवरेज पूरा दिसंबर तक का लिया है, लेकिन हमारा सेल मार्च में हुआ, तो हम मार्च तक का ऐसा वेटेड एवरेज लेंगे क्या?
बिबू ये क्लोजिंग स्टॉक की बात कर रहे हैं हम यहाँ पे. सो बिबू हमने क्या किया? क्लोजिंग स्टॉक, राइट? वी आर वैल्यूइंग आवर क्लोजिंग स्टॉक, राइट? क्लोजिंग इन्वेंट्री. सो मेरी क्लोजिंग इन्वेंट्री क्या है? टोटल परचेजेस माइनस टोटल क्वांटिटी सोल्ड, राइट? So we have purchased 2,000 quantity in a year and we have sold 800 quantity in a year. So what is my closing balance, Bibu? 1,200 units. How to measure this 1,200 units? Is 1,200 units की cost क्या होगी? So we have some purchases in January, some purchases in February, some purchases in June. We have some sales in March. We have some sales in, November, December, etc., right? So when I'm computing my closing inventory, in that case I'm applying my weighted average method. Acha, your question is the entire inventory sold in the month of March. That's what your question is, Bibu?
No, sir. My question: will we take directly weighted average? We have sold in March, so we will take weighted average of Jan and Feb, like that.
So Bibu, let me just reframe your question, right? So let's say if I would have sold, if I have sold only 100 units from, Jan and Feb, right? So if I have to do it more complicated, what I can do, I can take the weighted average of this and I can say that I have already sold, 100 quantity out of this, right? So 1400 quantity is left with this average price, right, Bibhu?
Yes, sir.
So even in that case, when you do the weighted average, you will get the same answer. तब भी तो सेम आंसर ही आएगा ना. जैसे क्या
Yes.
होगा विभू, फॉर एग्जाम्पल आपका क्लोजिंग यूनिट मार्च में कितनी बचेंगी? क्लोजिंग यूनिट बताओ.
1400.
1400 ही बचेगी ना, माइनस
Yes,
दिस.
sir.
अब आपका वेटेड एवरेज क्या है? 10 और 15 का. आप इसका टोटल कर लेते हैं ना. सो 17,500. सो वेटेड एवरेज 17,500 इज द टोटल कॉस्ट. लेट्स से, जस्ट अ मिनट. Bibu, have you got it or should I explain more?
Sir, I have got it, sir. In
Oh,
weighted
you've got-
average, we will have the same weighted average.
Yes. So weighted average value will same na, Bibu. Right. It will be
Sir,
same.
we will only get a more here calculations and complications. Otherwise, answer is same.
Yes.
In with
Right. Okay. Okay. Yes. So friends, this is FIFO method and weighted average method. This is FIFO and weighted average method. LIFO is prohibited under AS, Ind AS, IFRS. In all the format, LIFO is prohibited. LIFO is prohibited, right? Okay. Yes. So Prithviraj is having some question. Sir, if we calculate step by step weighted average price of stock, then the closing price will be some difference, as the rate at which March sale is done will include average of rate in Jan and Feb. Closing rate should be more than, as it is more affected by June purchase rate than rate in Jan and Feb, right? So Prithviraj, let me take you guys on this and let's see this. Let's go step by step, okay? So up to March, what is my total purchases? 1500 units. And what is my total purchase price? 17,500. What is my average rate? My average rate is how much? Guys, what is my average rate? My average rate comes out at what? It comes out at 12 rupees some paisa, right? 11 rupees 67 paisa. Okay. Yeah. 17,500 is the price. So I am assuming 100 units have been sold out. 100 units have been sold out. Okay. So in this case, when 100 units have been sold out, just a minute, insert. Yes. If 100 units have been sold out, right? So I am measuring quantity and the value of the purchases, right? What is my quantity purchased and the value of the purchases? Okay. I'm assuming with the same value, my inventory is out. With the same value, my inventory is out. Okay. So what is my closing balance from the January lot? What is my closing balance from January lot, guys? What is my closing balance from January lot? My closing balance left from January lot is this one, right? यही होगा ना? मेरा January lot से closing balance क्या होगा? This will be my closing balance from January lot. Yes or no?
Yes, sir.
Yes. यहां तक तो कोई डाउट नहीं है ना किसी को? Is any doubt? Do you have any doubt up to this level? Then my February lot. So Jan Feb के lot से मेरा Jan and Feb. Then I have a purchases in June. Okay. So now I have a purchase in June. Then I have sold in November and December. So friends, if I talk about this remaining amount, at the end of the June, for example, 1900 units at the end of the June. Okay. And what is my value? 16,333 plus 10,000. So what is my closing value? My closing value is 13 rupees 85 paise. Some little bit of difference, right? But largely it will be same. Right? There is hardly a little bit of difference. But in examination, you can do like this. Okay. Like instead of 13.75 paisa, there is a very minimal kind of a difference. Okay. And why it will come? It will come because of it is getting sold in between. And that is why it is coming, right? Is that clear? Yes, Prithviraj?
Yes.
Yeah? Okay. So that's why I thought I should make the calculation and show it to you guys. But in case of examination, you can do like, right? You can just take the average and you can apply that average. So friends, now coming to this FIFO and weighted average. So don't apply LIFO. LIFO is only available in US. It is available in US GAAP. It is not available in Ind AS, AS and IFRS. Okay. And friends, whatever cost formula you're using, be it FIFO or be it weighted average, you have to use the same cost formula. The entity has to apply the same cost formula for all the inventories having a similar nature and use to the entity. Having a similar nature and use to the entity. Okay. Similar nature and use to the entity. Right? Means, let's say, Reliance has a store. Reliance is manufacturing FMCG, foods and groceries. Reliance is also selling apparels, clothes. Reliance is also selling electronic items. Have you seen that?
Yes, sir.
आपने देखा होगा ना? Yeah? Have you seen that? In one store, you found food and groceries, clothes, electronic items. Okay. So whether these are three class of inventory or whether these three items are same item, whether it is one class of inventory, all these three put together, is it one class of inventory or is it three class of inventory?
This is three class of inventories.
These are three class of inventory, right? So these are the three class of inventory. They don't have a similar nature and use to the entity, correct? So these are three class of inventory.
Yes, sir.
So if the company wants to apply the FIFO method for food and groceries and weighted average method for, let's say, apparels, clothes, and again FIFO method with electronic item, the company can do that. So the point is, whatever cost formula has to be used, it has to be the same cost formula for all the inventories having a similar nature and use to the entity. If the nature of inventory is different, then you can apply the different cost formula. Means on one class of inventory, you can apply cost, on another class of inventory, you can apply weighted average method also, right? For inventories with different nature or use, different cost formula may be justified. Okay. That clear, guys? Is that clear?
Yes, sir.
Clear.
Okay. So then inventory valuation technique. So we discussed the inventory valuation by specific identification method. If there is no specific identification, then FIFO or weighted average method, right? So inventory valuation technique. So what is this inventory valuation technique? If the inventory is ordinarily interchangeable means there are 5 WagonR cars of white color, VXI model. Will you be able to identify if all these 5 WagonR cars are there, white color WagonR, Maruti WagonR cars, no nameplate? Will you be able to identify which car belongs to you?
No, sir, cannot.
Yeah. So means,
some mark should be there.
so for example, you went to the showroom and you told, I need this first car. Even though he will give you the fifth or the last car, you will not be able to identify, right? Because all are white color, Maruti Wagoner, VXI car, all are identical, ordinarily interchangeable. So if inventory is ordinarily interchangeable, you can apply the historical cost method like FIFO and weighted average. Right? But if you want to apply non-historical cost method, so there are historical method, there are non-historical method also. Non-historical method like retail inventory, adjusted selling price method. What is this adjusted selling price method? What is this retail sale price method or adjusted selling price method? For example, you know the sale price. If you went to some super bazaar or big mart, and when you buy some products, so they are entering into the computer and they are giving you the bill, okay? And on all the item MRP is there. On all the item their MRP is there, like Big Bazaar, Reliance Fresh, okay? On all the items MRPs are there. So they know that, whatever we have purchased, we have to have a margin of, let's say, 20%, and that's how they put their MRP, their sale price. For example, MRP is, so day before yesterday, I went to Reliance Fresh and I want to buy some ghee, Madhusudan ghee and milk food ghee. The MRP on the milk food ghee was 600 rupees, but I got it 540 rupees. And probably Reliance Fresh must have purchased at 500 rupees. Okay. So basically their view is, whatever is our cost of purchase, we will earn 8 to 10% on that. Right. So another kind of inventory valuation method is retail sale price method. Retail sale price method means, my closing stock is 1000 unit. You know that my sale price, because it is feeded into the system, my sale price is, let's say, for 1000 unit, my sale price is 10 rupees, 1 lakh rupees, the total sales value, and my profit margin is 20% on sales. So what is my cost of inventory as per retail sale price method? बताओ क्या होगी? 1 lakh रुपी सेल प्राइस है, 20% मार्जिन है, तो बताओ what is my cost of inventory? क्या होगी मेरी cost of inventory? Tell me quickly.
सर 20% मार्कअप सेल प्राइस पे है कि कॉस्ट पे है?
सेल प्राइस पे
80,000.
80,000 is my cost of inventory. So this is another method. Retail sale price is another method. Second is standard cost method. Standard cost method means you apply the costing principle. You measure material, labor, overhead, everything, and you measure the cost of that item. Standard cost, right? If inventory is not ordinarily interchangeable, then means you cannot interchange your inventory. Means you are going to purchase a necklace, a jewelry, and you will not be able to interchange with other jewelry, right? Every jewelry has a different value depending on the design, depending on the work, depending on the weight, right? In that case, which method is applicable? FIFO, weighted average method, retail sale price, standard cost, specific identification method. Specific identification.
Specific.
Generally used in the jewelry and tailor-made industries. Right. Friends, any question on this inventory valuation technique? Any question on this cost formulas?
No, sir.
No, sir. Clear, sir.
Is it clear or clear?
Clear, sir.
Clear.
Clear? Oh, very good. Yeah. So then illustration number 5, let's discuss this illustration. Mars Fashion is a new luxury retail company located in Lajpat Nagar, New Delhi. New luxury retail company. Kindly advise the accountant of the company on the necessary accounting treatment for the following items. One of company's product line is beauty product, particularly cosmetics such as lipstick, moisturizers, and company makeup kits. The company sells hundreds of different brands of these products. Each product is quite similar. It's purchased at similar prices and has a short life cycle before a new similar product is introduced. The point of sale and inventory system is not yet fully functioning in this department. The sales manager of the cosmetic department is unsure of the cost. It is not sure of the cost of each product, but confident of the selling price and has reliably informed you that the company on average make a gross margin of 65% on each line. Tell me, for this beauty products, which inventory valuation method is more suitable?
Specific.
Retail.
Retail sale price method. So he
Yes,
is
sir.
not
Retail
aware
sale
about
price.
the cost, but accountant knows that accountant know the sale price and he knows that what is the margin I am earning. So adjusted retail sale price method is more suitable in this case. Second, Mars Fashion also sells handbags. The company manufacture their own handbag as they wish to be of assured of the quality and craftsmanship which goes into each handbag, like Louis Vuitton, 1 lakh rupee of a bag, right? If we have 1 lakh rupee, we purchased a bag of 1000 rupees and put 99,000 rupees in that bag, right?
Yes.
Perfectly.
But the costly or expensive bags, so they are running into lakhs, even crores also. Neeta Ambani, wife of Mr. Mukesh Ambani, the bags he is using is worth of crores, right? So worth of crores. So the company which is manufacturing the bags for such a billionaires, so they are manufacturing limited quantity. And every quantity, every product is a unique product. Okay. So whether the company is applying FIFO or weighted average for those kind of inventories, those are just
Specific
like jewelries.
identification.
Specific identification
Specific.
cost method, right?
It's a specific cost method.
Yeah. So in this case, these bags are also kind of a quality and craftsmanship. The handbags are manufactured in India in the head office factory, which has made handbags for last 50 years. Normally, Mars manufacture 1 lakh handbags a year in their handbag division, which uses 15% of the space and overheads of the head office factory. The division employs 10 people and is seen as being an efficient division within the overall company. Tell me in this case for these bags, which method should be the suitable method? Tell me, which method should be the
Standard
suitable
costing.
method?
Standard costing, sir.
Tell me, standard costing or something
Standard
else?
costing, sir.
It can be standard costing method, right? That what is my standard cost? What is my standard cost? Okay. Yes, you're right. Let's quickly do illustration number 7. Mercury Limited uses a periodic inventory system. The following information relates to 2001-2002. April inventory was 200 unit, cost per unit 10, 2000 is total cost. In May and September and February there was purchases 50, 400, 350. These are the values, right? So physical inventory is 400 units. Calculate closing inventory value and cost of sales using FIFO and weighted average. So the total inventory is 1000, but the closing inventory is 400. Means 600 inventory has been sold. 600 unit have been sold. Friends, tell me, what is the value of this 400 units as per FIFO method and as per weighted average method? क्या value होगी? By 600 units have been sold. In that case, this 200 has been sold. This 50 has been sold, and और कितना 250 plus 350. 350 has been sold from this. So 50 units have been left from September and 350 left from February. So 350 multiply by 14 and 50 multiply by 12.
By 12, 16, 600.
4900 plus 600 is 5500. So 5500 is the value of 400 units. 5500 divided by 400. Going by the weighted average method, what is the value? 1000 unit cost is 12250. What is per unit cost? 12 point?
Per unit cost 12
Total will be
250.
4,900 will be total.
12 rupees 25 paisa multiply by 400 units is the value of your inventory, right? This is your value
Yes,
of
sir.
the inventory. Okay. This is your value of the inventory by FIFO method and by weighted average method.
Sir, I have one query, but only the thing is that only 400 units are left. When that doing that weighted average, why we are using that earlier month as well? In the only last 2 months price, can we use that weighted average?
So you have to see the total weighted average of the inventory, right? Whatever is the opening, whatever is the purchases, what is my total cost divided by total units? Right? This will give you the weighted average. Okay. Now coming to the last concept of NRV. What is NRV? Net realizable value. It is different from the fair value. How it is different from the fair value? Fair
Sorry.
value is the market value, market participants value, market value. But NRV is the entity specific value. In how much price you will be able to sell. That is the NRV. Right? Net realizable value. So net realizable value is the estimated selling price in the ordinary course of business less estimated cost of completion and sale. The cost of sale includes directly attributable marketing and distribution cost. So the first point, inventory has to be measured at cost or NRV, whichever is lower. Cost, we have computed. NRV, so today I have an inventory. How will I compute the NRV? What is my estimated selling price? For example, I will be able to sell this inventory at 100 rupees. But I know if I have to sell this inventory like flat, I know that I will be able to sell the flat at 1 crore rupees. But for selling this flat at 1 crore rupees, I need to renovate this flat. And the estimated cost of completion or renovation is, let's say, 10 lakh rupee. Right? So I will get 1 crore rupees. I will get 100 lakh rupees, but I have to incur 10 lakh rupees also. So my estimated selling price minus estimated cost of completion. Minus, I need to pay a 2% brokerage for selling this flat. So what is my NRV? My NRV from this flat is not 1 crore rupees. It is 88 lakh rupees. My NRV is 88 lakh rupees. Net realizable value is 88 lakh rupees. What is my net realizable value? Estimated selling price minus estimated cost of completion minus estimated selling cost. Right? So this is meaning of NRV. This is the meaning of NRV. Okay. Friends, now NRV. So there are three kinds of inventory: raw material, work in progress, and finished goods. For finished goods and work in progress, you have to measure your inventory at cost or NRV, whichever is lower. What about the raw material? There is some special treatment about the raw material. Friends, raw material has to be measured at cost, right? It has to be reduced to NRV only in one situation, right? So there is a raw material and the company's intent is not to sell the raw material. What is the company's intent out of that raw material? Can you please tell me? What is the company's intent from the raw material?
To produce
To
the
get it
final
finished product.
finished goods.
To use in the production for producing the finished goods, right?
Yes, sir.
Correct. So फिनिश गुड्स में तो कंपनी का इंटेंट सेल का होता है. WIP भी सेल के लिए ये WIP मतलब वर्क इन प्रोग्रेस है. It will be completed and then it will be sold. But raw material is raw material. Raw material has an independent value also. But company's intent is not to sell the raw material. So if there is a raw material lying in the stockyard, if there is a raw material lying in the godown, warehouse, plant, factory, how that raw material is going to be measured? Standard says that for raw material, you need to look at the finished goods, right? If the finished goods is sold at or above cost, right? For example, I'm using a chip in this mobile phone. And I know that for producing this mobile phone, it costed me 40,000 rupees. And chip is the raw material. The value of the chip is 10,000 rupees. Chip is the raw material and the value is 10,000 rupees. Okay. So if I'm selling my mobile phone at more than 40,000 rupees, at 40,000 or more than 40,000 rupees, I know that my finished goods will be able to sold out at cost or more than cost. Then I need to measure my closing value of raw material at cost. Guys, are you clear on this? इन्वेंट्री का आप सब्सिक्वेंट मेजरमेंट भी किस पे करते हो? इनिशियल और सब्सिक्वेंट मेजरमेंट, कॉस्ट और एनआरवी विच एवर इज लोअर.
लोअर,
सो व्हाट आई एम
अगर
टेलिंग यू,
लोअर पे किया तो,
what I'm
एनआरवी पे
telling you,
किया तो,
what Vibhu, just a minute. What I'm telling you, for WIP and finished goods, you have to compare your cost or NRV, whichever is lower. But what about raw material? For raw material valuation, you need to look at the finished goods. अगर finished goods cost या cost से ज्यादा पे बिकता है, then raw material has to be measured at cost. But what happens when finished goods are sold at NRV? Finished goods are sold at NRV, which is less than the cost. For example, this mobile phone, due to the less of demand, due to the low demand, or due to the upgrade in technology, the value of this mobile phone has gone down. And the cost is 40,000, but I will be able to sell this mobile phone at only 30,000 rupees. Then there are high chances the value of the raw material has also gone down. होगा या नहीं होगा? होगा ना?
Yes.
वो रॉ मटेरियल जिस फिनिश गुड्स में लगता है, अगर फिनिश गुड्स की मार्केट वैल्यू गिर गई तो रॉ मटेरियल की भी तो वैल्यू गिरेगी. नहीं तो फिनिश गुड्स तो कभी बिकेगा ही नहीं, मतलब फिनिश गुड्स कोई बनाएगा ही नहीं. राइट? So friends, if your finished goods is sold below cost, means at NRV, then raw material is measured at replacement cost, measured as NRV. Replacement cost means that today's cost. Today's cost means more likely that raw material cost will also go down. Okay. So that raw material has to be measured at replacement cost, measured as NRV. Okay. Right? Is that clear?
Clear.
Friends, let's discuss this illustration. UA Limited purchase raw material at 400 rupees per kg. Company does not sell raw material but uses in production of finished goods. The finished goods in which raw material is used are expected to be sold at below cost. क्या करें? The finished goods is expected to sold below cost, means this raw material also has to be measured at replacement cost. Okay, NRV. At the end of the accounting year, company is having 10,000 kg of raw material in inventory. As the company never sells the raw material, does not know the selling price of raw material, and hence cannot calculate the realizable value of the raw material for valuation of inventories at the end of the year. However, replacement cost of raw material is 300 rupees per kg. If company will go to the market today and will buy this raw material, it is costing rupees 300 per kg. How will you value the inventory of raw material? Tell me. किस पे वैल्यू होगी इन्वेंट्री रॉ मटेरियल की?
Replacement cost.
At the replacement cost, at the 300 rupees. As per Ind AS 2 inventories, material and other supplies held for use in production of inventories are not written down below cost if finished goods in which they will be incorporated are expected to sold at or above cost. However, when there has been a decline in the price of material and it is estimated that the cost of finished goods will exceed net NRV, the material are written down to NRV. In such circumstances, the replacement cost of the material may be the best available measure of the NRV. Therefore, in this case, the company will value the inventory of raw material at 30 lakh rupees, which is 10,000 kg multiplied by 300. Okay, this is the value of your raw material. Okay, friends, if your cost is 100 rupees and NRV is 80 rupees, where 20 rupee will go? Where 20 rupee will go?
Profit and loss account.
Impairment loss in P&L. Impairment loss on inventory in P&L. Yes. You remember when we covered Ind AS 36 impairment of asset, we excluded inventory from the scope of Ind AS 36. Why?
Yeah.
Because the impairment on inventory is covered under Ind AS 2. It is covered under Ind AS 2. Right? Cost or NRV, whichever is lower. So your inventory is always at the recoverable value, right? Okay. So any write down of inventory to NRV is recognized as an expense in the period in which the write down occurs. What happens if there is a favorable outcome of the inventory? There is a favorable indicator of the inventory. Then in future,
then we will
reverse
follow
the
the concept
impairment.
of conservatism.
Yes. So whatever impairment loss you have recognized, you can reverse the impairment loss if there are favorable indicator. If the market price has increased, NRV has increased, you can reverse the impairment, right? This is what it is written. These are the disclosures, accounting policy adopted in inventory, cost formula, right? All these things are required to be disclosed just for reference, not for the exam purpose, right? And this is your favorite slide. Thank you so much, friends. We have completed this Ind AS to inventories in one class. It is a small standard, right? It is just like accounting standard 2, no major changes in comparison to AS2. I hope you have understood this Ind AS 2. I hope you have enjoyed the session. And friends, please cover all the questions from ICAI study material. Please rehearse all the questions and please read this PPT once again. Refer this PPT, right? In this PPT, the entire concept is there. Okay. Thank you so much. Thank you so much, friends. Thank you so much.
Thank
I
you.
hope you have
Thank
enjoyed
you.
the session. Right?
Thank you so much, sir.
Thank you so much, sir. Have a great day.
Thank you. Same to you. Bye bye. Take care. Session is over, Ashokji.